Okay, we can start with the class. Good evening, everyone. Welcome to our FAC 3764 class. We're going to look at property, plant, and equipment. Let me just admit these other guys. Okay, so I think property, plant, and equipment with a background for it, but let's go through the notes first, then we'll look at a long question. So in property, plant, and equipment, the main principal issue is to look at the recognition of the PPE, the determination of the carrying amount, and also be able to charge depreciation to the assets. I think that's the main principle behind PPE, which means we should be able to account for the asset at initial recognition, then subsequent measurement, that is to determine the carrying amount of the assets. So that's the main principle behind PPE. So let's quickly go through the notes together. So in internet, sorry, can you please mute yourself? As soon as you get into the class, please mute yourself. Okay. Right, so what we are going to look at on International Accounting Standard 16 is the treatment of property, plant, and equipment. So what we will be doing in the treatment of property, plant, and equipment is to be able to do the recognition of PPE assets. And so when we recognize PPE assets, then it means we need to calculate the value of the PPE asset. In another way, that's the cost of PPE. So in the cost of PPE, you are going to see that we have the price and anything that is attributable, any cost attributable to bring that PPE asset to use. So which means when you look at the cost of the asset, it means you are going to look at the purchase price and any cost that is attributable to bring that particular asset to use. So that is going to be your initial recognition of a PPE asset. So if in the question they requires you to recognize a PPE asset at initial measurement, so what they are saying is you need to bring all cost to that asset. Then that is going to be the cost of that particular asset. So in another sorry, can you please mute yourself, please? Mute yourself, please. Mute yourself. Can you please mute yourself? Right? So we will be looking at the recognition of PPE as assets. Then we need to determine the carrying amount of the asset. So when you are determining the carrying amount of the asset, so this is where you have to say the cost of the asset less accumulated depreciation. So that's determining the carrying amount of the asset. So which means here you will be charging depreciation to that particular asset, including impairment. So that's basically how we present PPE assets, which means we should be able to determine the cost of the asset. That is the initial measurement. Then in the subsequent measurement, we should be able to determine the carrying amount of the asset, meaning to say we are charging depreciation and impairment to that particular asset. So it's a very is topic, which means you should be able to accumulate all the cost to the assets. Then you less the depreciation. Then you have your carrying amount of that particular asset. So what is important for you guys is to be good in calculating depreciation. I think that's the only thing that need to be understood so that you come up with the carrying amount of the asset. Right, so let's look at the terms that we are going to use. We have the carrying amount of the asset. So the carrying amount of the asset is equal to the cost less accumulated depreciation. So that is going to be the carrying amount of the asset. So this is what you are going to recognize in the statement of financial position after you deduct accumulated depreciation and impairment loss. So that is the carrying amount of the PPE asset. Then we have the cost. Remember, in the cost, we say there is the purchase price. In the cost of the asset, we have the purchase price. Any cost to bring, let me just say, to bring the asset into use is going to be part of the cost of the asset. So which means in a question, if you are provided with the purchase price, then they can say import duty, anything like foundations to place that particular asset, then it means they are going to form the cost of the asset, of that PPE asset. So in a question, don't look at the purchase price only. Look at any cost that will bring that asset into use. Then you add them to the purchase price. That is going to be the cost of that particular asset. Right, then depreciable amount. Once we have our cost, then we need now to look at the residual value. If in a question you are provided with the residual value of the asset, then it means you need to first deduct residual value. Then you are going to have the depreciable amount. So if in a question you are provided with the residual value of the asset, then it means your depreciable amount is going to be, after you deduct that the residual value, then the specific value. So in the specific value, it means you are going to determine the present value of the cash flows. So when we talk of the present value of the cash flows, I think we do this in our web in MAC, which means you will have projected cash flow for year 1, year 2, year 3. So you need now to bring them to present value. I think we understand how do we bring them to present value, where we say N PV PMT, then we use the financial calculator to bring to present value. Then the fair value is what we can get when we want to sell that particular asset. So that would be the fair value of the asset. This is the actual price that we can get if we go out there and say we are selling this asset. So this is what we are going to be able to sell the asset for. So that is going to be the fair value. Impairment loss is going to be, I think we're going to do impairment loss in International Accounting Standard 36. That's a full topic for impairment loss. But for now, impairment loss is a situation when the carrying amount of an asset exceeds the recoverable amount. For an example, you have calculated your carrying amount to be 3,000, but you see that the recoverable amount is 2,000. So which means this is what you can recover from the asset. So you need to bring down the asset to a recoverable amount. So which means 1,000 is going to be impairment loss. Impairment loss is going to be an expense in the profit and loss. So which means if the question requires you to disclose the impairment loss in the financial statement, it means you are going to disclose it in the profit and loss as an expense. So that's some of the questions will require you to disclose the PPE in the statement of in the financial statements. So which means when you have impairment loss, you take it to the profit and loss as an expense. Right, then let's look at the property. What is this property, plant and equipment? You will see when we do AIS 40 investment property, you will see the difference between PPE and investment property. In AIS 16, PPE is going to be for use in the production or supply of goods and services. But when you go to AIS 40, investment property can generate income on its own. So that is investment property. But you can see PPE is going to be used in the production or supply of goods and services, which means the machines that we use, the buildings, all those are going to be PPE. But if it's something is going to be used to generate income, like investment property, where we get rentals from, then that one is not going to be part of a PPE. You will see when we do AIS 40, the difference between investment property and property, plant and equipment. Right. Then we also have this part of a PPE. In some of the questions, they will give you things like spare parts of a machine. So if the spare parts can only be used in less than one financial period, then it means it's not going to be part of a PPE. A PPE is only something that can be used for more than 1 year, which means for more than one financial period. So in your question, you should also look at this. If it is something that can only be used within a year, then it's not going to be PPE, it's going to be inventory. So that's another thing that you should look when you are doing your questions. So the PPE can only be used over one financial period, which means it's going to be 1 and above years. Once it is used within a year, it becomes inventory. So which means it's going to be part of the inventory. Then we have recoverable amount. I think this we're going to cover it when we do International Accounting Standard 36, impairment loss. But for now, let's just look at what is this recoverable amount. The recoverable amount of an asset will compare the higher of the asset's net selling price, that is its fair value less cost to sell. So which means the net selling price. In some of the questions, they will give you the fair value of the asset, then the cost to sell the asset. Then they want you to calculate the net selling price, which means it's going to be fair value less cost to sell. Then that one is going to be the net selling price. So the recoverable amount is going to be the higher between the two, which is the fair value less cost to sell and the value in use. Value in use is the present value of the cash flows that are going to be generated by the asset. So which means this one is going to be the present value of cash flows generated by the asset. So that is going to be the value in use. Then we have residual value. I think this one is what is going to be left after we are at the end of the useful life of the asset. So which means this is the estimated amount that an entity would obtain when the asset is no longer capable of doing what it is supposed to be doing. Then we look at its value. That is going to be the residual value. We can dispose the asset at its residual value. Then the useful life of the asset, I think this one is also straightforward. The useful life of the asset, this is the period that we expect to use the asset. In your questions, you use the useful life to calculate depreciation. If the question says the cost of the asset is 3,000 and the useful life is 6 years, so it means you are going to divide 3,000 by 6 years. That is going to be your depreciation. So the useful life of the asset will determine the amount that should be charged as depreciation every year. The useful life can also be years or the number of production or similar units expected. You will see in some of the questions, you will be required to calculate depreciation using the number of production or similar units. So here they will give you like the machine can only produce, let's say 6,000 units. If the machine can produce 6,000 units, then in year one, if it produces 2,000 units, so your depreciation is going to be 2,000 over 6,000 times the cost of the asset. So you should also look out for this in a question. Do I use the number of production or am I going to use the number of years when I'm calculating the depreciation? So it's also very important to take note of the useful life of the asset. Then another key area is when do we depreciate the asset? Okay. Someone is saying struggling to log in. Okay. Period of depreciation. Always look out for this when you are calculating your PPE. We only depreciate with an asset when the asset is available for use. They can say the asset was purchased on this date. Let's say they can say the asset was purchased on 1 May and was available for use on 3rd May. So this is the time when you start to depreciate the asset. So you should not be confused by this date. When the asset is available for use, that's when you start to depreciate that particular asset. Then you can only stop depreciation when the asset, you will see when we do International Financial Reporting Standard 5 for assets classified as held for sale, you may see that a PPE asset can be transferred to assets held for sale. So that time when the asset is transferred to assets held for sale, based on International Financial Reporting Standard 5, then it means you should now stop to depreciate that asset. And you will also see that when the asset is transferred to assets held for sale, it no longer becomes PPE, it now becomes a current asset. So once it's transferred to asset held for sale from a PPE asset, then it becomes a current asset in that way. So you will no longer depreciate a current asset because it's waiting for sale. It's no longer used in production. Right, so let's look at recognition of property, plant, and equipment. I think we have already talked about this. Measurement and recognition. This is the initial measurement. When we get the PPE asset, how do we measure? So in your question, you will see, especially theory questions, they can ask you to recognize, how do you recognize a PPE asset at initial measurement? So which means they are talking of when you get the asset, how are you going to determine the cost of that particular asset? So that's the measurement at recognition, determining the cost of the asset when you purchase the asset. So which means you look at here, you look at the purchase price, then any cost directly attributable to bring the asset to the location and the condition necessary for it to be capable of operating. If an asset is brought from outside the country, it means you look at import duty is also going to be part of the cost of the asset. If the asset needs other modifications whatsoever to make it suitable for use, then it's also going to be part of the cost of the asset. So when you are measuring the asset at initial measurement, you should look at the purchase price and any cost that bring that asset into use. Then it's going to be the cost of the asset, that is the initial recognition of the asset. Then in your questions also, you may be required to do the subsequent measurement, which is measurement after recognition. Sometimes they will ask you to do subsequent. It's the same thing like measurement after recognition. So when you measure an asset at subsequent measurement, we have two methods. We have the cost model and the revaluation model. So you should look at the question, am I required to measure the asset using the cost model, or am I required to measure the asset using the revaluation model? In the cost model, it's going to be the cost of the asset less accumulated depreciation. That's measuring subsequent measurement of the asset, subsequent measurement of the asset using the cost model. That is going to be the cost of the asset less accumulated depreciation. That is subsequent measurement using the cost model. Then if you are using the revaluation model, you will see assets like land. Mostly land, we use the revaluation model, which means it's going to be the cost plus the revaluation surplus. So that is going to be the revaluation model. And the revaluation surplus is going to be recorded in the profit and loss, specifically in other comprehensive incomes. So if the question requires you to disclose the asset in the financial statement, it also means that the revaluation surplus, you need to take it to other comprehensive incomes. Other comprehensive incomes. So that's another key area. And you will also see that there is going to be a deferred tax on the revaluation surplus. I think we're going to look that one closely in the next section. When there is deferred tax, I think we all understand how do we calculate deferred tax. That is the carrying amount and tax base of the asset. Then we have deferred tax from the difference between the two. So if there is a revaluation surplus, which means that revaluation surplus will attract a deferred tax. But assets that are going to be measured using the revaluation model, they have also capital gain tax, but we're going to explain that one more in other sections so that you can see where do you apply capital gain tax in deferred tax and where you don't apply capital gain tax in deferred tax. Then, hello?
Monitor.
Is it a question or is something else? Is there anyone with a question there?
Can never judge a book.
Hello? Is it a question? Okay, if it is not a question, then let's look. Sorry?
There's no question.
Yeah, you're cutting. Can you guys hear me clearly? Are you other guys, can you hear me?
Yes.
She's cutting. I think the network is giving a problem. Right, so let's look at the cost model. I think we've already talked about this. So most of your PPE asset, except land, you use the cost model. So in the cost model, it's going to be your cost less any accumulated depreciation. That is going to give you the carrying amount of the PPE asset. Impairment loss, we're going to do it in AIS 36, and I think it's a full chapter for impairment loss. But if the asset has been depreciated and impaired again, then it means you need to take into account the impairment loss. The impairment loss will bring the asset to its, remember we say to its recoverable amount. The recoverable amount is what we can get from the asset today. Remember, in the process of calculating depreciation or calculating the carrying amount of the asset, we use depreciation. But there's a situation where you will find that the carrying amount of the asset is now different from the recoverable amount of the asset. What determines the recoverable amount of the asset in most cases is the asset's capability to generate income. If the asset can no longer generate income, then it means it has to be impaired. But we're going to look at it in detail in International Accounting Standard 36. Right, let's look at the revaluation model. The revaluation model, I think we have already talked about it. This is going to increase the asset's carrying amount as a result of revaluation. Then the revaluation is going to be recognized in other comprehensive income. So if the question requires you to disclose the asset in financial statement, then it means you are going to disclose it in the statement of financial position, in the statement of profit and other comprehensive income. That is, the revaluation surplus is going to be, remember we say, after we say profit for the year, then we say other comprehensive incomes. So this is where you bring this revaluation surplus under other comprehensive income. If the question requires you to disclose the PPE in the financial statements. Once the question says in the financial statements, and they did not mention specifically which financial statements, which means you should look at all the financial statements. Where does it fit? The information pertaining to that particular asset, where does it fit in the financial statement? So which means you look at where does it fit in the
Recording in progress.
In the statement of financial position, where does it fit in the statement of profit and loss? Where does it fit in the cash flow? Normally, these are the ones that you should try to see where your asset will fit. In the profit and loss, let's say it's you are using the cost model, it means you are going to check the carrying amount to the statement of financial position. Then you check depreciation for the year to the profit and loss as an expense. So that's basically where it will fit, right? Then they say if the carrying amount is decreased as a result of revaluation, which means if the carrying amount is decreased, then it means you take it to the profit and the loss as an expense. Now it's no more income, it's now going to be an expense. Then let's look at
Why are you looking for it?
G recognition of a PPE asset. G
I don't know.
recognition
Don't
is removing the asset from as part of the PPE, which means when we sell the asset that is on disposal, or when the asset can no longer be used effectively to generate income, that's when we de-recognize. So which means an asset can be disposed when it can still be able to generate income. That one is going to be disposal. But when the asset is de-recognized because its useful life is no more, then we say it has no future economic benefits from the use. So when we dispose an asset again, there's going to be a loss or a profit arising from the de-recognition of a PPE. So you still need to take this to the profit and loss. So when there is a disposal of an asset, what you are going to do is to do your carrying amount of the asset that is going to be disposed. Then you look at the selling price. The difference between your carrying amount and the selling price will tell if there is profit or a loss. Once you have your carrying amount and the selling price is higher than the carrying amount, it means you have a profit. You take it to the profit and loss as income. It goes to other income. Remember, it doesn't fall under International Financial Reporting Standard 15. We only recognize as revenue what we get from the sale of items that you are trading in the business. So this gain or loss is not going to be part of revenue. It goes to other incomes. So you should also be careful to split it between revenue and other incomes. Then let's look at other subsequent costs of PPE. here we are looking at servicing cost. Servicing cost cannot be part of a PPE. They are repairs and maintenance costs. They are not going to be part of the PPE. They won't form part of the carrying amount of a PPE, but they are going to be expenses in the profit and loss. Then there is also a situation where we do replacement at regular intervals. You may find that some of the assets, for an example, a bus. Let me just give an example of a bus. A bus, you will see that there are things like the seats for the bus and the engine for the bus. Their useful life is different. The seats needs to be replaced at regular intervals. And when we replace these seats at regular intervals, they are going to increase the carrying amount of the bus. So how do we determine depreciation? Which means when we depreciate, you will see that the engine has got a longer lifespan than the seats. So we need to depreciate them separately when we do our depreciation. And when we replace the seats, those which the old seats are going to be derecognized. So which means if we replace the seats, the old seats with the new seats, it means we are going to derecognize the old seats and bring in the new seats. The carrying amount of the old seats is going to be derecognized. Let's just hear what they say here on here. They say parts of some PPE items may require replacement at regular interval, e.g. the interior walls of a building, such as an office block. You can see here that the interior walls, they are replaced at regular intervals, but the building is not replaced. So when we do our depreciation, we need to separate so that we know the building has got a longer lifespan and the interior walls has got a short span. So we separate them, and every time when we replace the interior walls, the old ones, we derecognize them from our PPE. I think there's a question on this one that we are going to look at. Then they say an entity recognized in the carrying amount of a PPE item, the cost of replacing part of such item when cost is incurred, the remaining carrying amount of the replaced part is then derecognized, which means once we replace the seats for the bus, those old seats carrying amount, we remove them from our PPE. Then we replace them with the new replacement. So that's the derecognition of the replaced parts. I think there's a question. Let me just, there's a question for that one here. So let's look at another regular major inspection. You will see that inspections and replacement, they look more or less the same, but inspections is a situation where we do regular inspections for faults, right? When we do regular inspections for faults, there is going to be a cost. So the cost is going to be recognized in the carrying amount of the asset as a replacement and is going to be depreciated. So here again, we separate them. We separate the asset and the replacement so that we can be able to depreciate them. The reason why we separate them is the useful life of the replacement is shorter than the useful life of the asset. So we need to separate them so that we can be able to depreciate them. In your questions, you will see they will say there is a regular inspection after so and so years. So which means that regular inspection is going to be part of the carrying amount of the asset. but we separate them so that we can be able to depreciate them. The reason why we separate them is because they have different lifespan. So we cannot depreciate them as one amount because the replacement and the asset have different lifespan. So that's the main reason why we need to separate them. But let's look at this activity. I think it's about this regular major inspections. They say Gene Limited bought a machine on 1 January 2012 for 1,600,000. The machine has to be inspected every 6,000 hours, which means that a major inspection will have to be carried out every 2 years. The estimated cost of a major inspection is 150,000. The machine has an estimated useful life of 8 years. What we are required to do is to calculate the depreciation and carrying amount of the machine for 2012 and 2013. So what you look at here when you are doing this question is you look at, we have a machine that was bought for 1,600,000. The machine has to be inspected every 6,000 hours, which means that a major inspection will have to be carried out every 2 years. The estimated cost of a major inspection. So we have the inspection cost. So the inspection cost will be in the cost of the machine. So which means we need to separate them so that we can be able to depreciate them. Right, so let's see how do we do the calculation for this part. Let me just so which means we need to do the depreciation. Right, so when you are doing the depreciation and carrying amount of a machine and the inspection, you need to separate them. So which means you are going to have the machine and the inspection component. You are going to have the machine and the inspection component. So the cost of the machine, you need to separate the two. Let me check. We need to separate the cost of the machine and the inspection component. But always bear in mind that the inspection component is also part of this machine when it was bought. So which means we separate it from 1,600,000 minus 150,000. That is going to give us the cost of the machine. Then the cost of the inspection is going to be 150,000. So which means on the cost, we are going to have on the cost we are going to have 1,600,000 minus 150,000. That is going to be the cost of the machine. How much are we going to have as the cost of the machine? Minus 150. So it means the cost of the machine is going to be 1,450,000, and the cost of the inspection component is 150,000. Right, we want to calculate the depreciation and carrying amount. So we go and look at how do we depreciate the machine. Let's look at how do we depreciate the machine from the question. The machine is going to have an estimated useful life of 8 years. And the inspection component is going to be carried out after every 2 years. So which means when we depreciate the inspection component, we are going to use 2 years. When we depreciate the machine, we are going to use 8 years. So we are going to have depreciation is going to be for the machine, it's going to be 1,450,000 divided by 8. Then for the inspection component, it's going to be 150,000 divided by 2. So that is going to be our depreciation. Remember, the question says for 2012. So this one is for 2012. So how much are we going to have as our depreciation for the machine?
181,250.
181,250. Then for the inspection component, is by 2 is 75,000. Am I right?
Yes.
Then we have the carrying amount at the end of 2012. So which means we just subtract the depreciation. The first one is going to be 1,450 minus 181. This is 181,250, which is going to be 1,000,000.
258.
1,268,750. This one is going to be 75,000. Then we need to calculate the depreciation for 2013. Remember, we're doing for 2013 and 2012. So the depreciation doesn't change as long as you are using the straight line method. The depreciation will only change if we are using the reducing balance. But if you are using the straight line method, the depreciation is going to be the same every year. So it's still going to be 181,250. And here it's going to be 75,000. So the carrying amount, what is going to be the carrying amount at 31 December 2013. So which means we are going to subtract here 181,250 from here. How much are we going to have there? Here it's going to be nil, but 75 minus 75. So here it's going to be how much here?
108. 1,087,500.
Right. So this is how you answer a question if it has an inspection component, which means you need to separate them when you are answering the question where there is inspection component or in some of the questions, you might find that there will be a replacement part. So you need to separate the replaced part and the machine so that you will be able to depreciate them. And remember, after every 2 years, which means here in 2014, we are going to have a new inspection, which means we are going to have this 150 again in 2014. Then we start to depreciate it the same way until the asset, the main asset's useful life is finished. That's how you do your questions on PPE. If the question has got a replacement part or inspection component, you need to separate them so that you will be able to do depreciation. Remember, we say the reason why we separate them, you can see here the useful life are different. So you cannot depreciate them as a full amount like here, because their useful life are different. So that's basically why we need to separate them. Right, I don't know if there is anyone with a question so far before we go to something new. If there is anyone with a question.
Yeah, I would like to know. You said impairment loss is whereby carrying value is more than recoverable amount. But if it is vice versa, recoverable amount is more than the carrying value, what do you call it?
Okay, we said impairment loss is when the recoverable amount is greater than, which one is greater than is less than the carrying amount, ne? So the difference is going to be impairment loss. When so your question is when the recoverable amount is less than the carrying amount. So you want to know what you call that one?
Yes.
We call it impairment loss reversal. You see what is going to happen if your recoverable amount, because the reason why sometimes the recoverable amount become less than, not less, the carrying amount, the recoverable amount become more than here, is because the machine is gain value. So in that way, it means it's going to be an impairment loss reversal. So in an impairment loss reversal, then it means you are now going to increase the carrying amount of the asset. So that's how you treat. I think you will see when we do International Accounting Standard 36, there's a situation where we do impairment loss reversal, which means the recoverable amount is now less than the carrying amount of the asset. So there's going to be an impairment loss reversal. So that impairment loss reversal, you take it to the profit and loss. It's no more an expense. It's now going to increase your income. Remember, the impairment loss is going to be an expense in the profit and loss. So now if there is a reversal, the reversal now is now going to be part of the income. But we are going to cover it more in detail in International Accounting Standard 36. I think, yeah, it's the next topic after these two topics, investment property and PPE. I don't know if you still need more clarification on that one.
No, it's understood.
Yeah, but we need to understand it more, and you should know why and when do we have impairment loss reversal, and what causes an impairment loss of the asset. I think we will cover it in detail in that learning unit. Any other question before we go to the next part of the section? I want us also to, in some of your questions, you will have a situation where there is an exchange of PPE items. You should be able to know which value are you going to use. This is also very important because in some of the questions, they will require you to determine the value or the cost of the asset where there is an exchange of PPE items. That in the exchange of PPE items, we have a situation where one or more PPE items may be acquired in exchange for monetary or non-monetary assets, which means there is going to be an exchange. So the most important thing is to determine the value or the value that we are going to record in our books for that exchange. So when there is an exchange, the cost of the acquired item is measured at fair value. Normally, we measure it at fair value of the given up asset. So if there is a situation where you exchange an asset with another asset, it means when you record it in your books, you are going to record it at the fair value of the asset that you have exchanged. So that is when there is an exchange of PPE asset. But there is a situation where you can't determine the fair value of the given up asset or the received asset. So if you cannot determine the fair value of the given up asset or the received asset, then it means you are going to, so in your question, you should look careful. If the question says the fair value of neither the asset received nor given up cannot be measured, then it means you are going to measure it using the carrying amount of the asset given up. So these are the two criteria if there is an exchange of PPE items. So you should look at where there is no fair value, it cannot be measured, then it means you are going to use the carrying amount of the asset that is given up. So that's another key area that you should look at in your PPE questions, where there is an exchange of PPE items. I think there's an activity for that here. Let's do this together. I think based on our explanation here, we will be able to do this activity together. Let's look at transaction 1. They say a motor vehicle with a carrying amount of 100,000 in the records of Bob Limited and a fair value of 120,000 was exchanged for a light delivery vehicle of Z Limited with a fair value of 125,000. The fair value of both vehicles can be readily determined since there is an active market for used vehicles. So the question requires us to calculate for each transaction the amount at which the new asset acquired from the exchange should be measured in the financial records of Bob Limited. Right, so transaction 1, what is the value that we are going to use to record the asset for transaction 1? Anyone who can determine the value that we are going to use to record the exchange vehicle?
Fair value.
Sorry?
Fair value.
The fair value of who? Because we have two fair values here. We have the fair value for Zex and the fair value of Bob. But that's another area that you guys should be careful when you are answering your questions.
Yeah.
I think we use the fair value of the asset that is being given up.
So Bob is the one who is giving up. Am I right?
Yes. Okay.
So which means we look at the fair value of Bob Limited. So when you are answering when you are normally it will be a comprehensive question. So when you are at this part of the question, always look at the given up asset. So which means you need to look at who is giving, which books are you dealing with. Here we are dealing with Bob. So we need to look at the fair value of Bob's asset because it's the one with the books that we are dealing with. But if you were dealing with Z's Limited books, then it means we're going to look at the fair value of Z's Limited. So always look at which financial statements you are doing the financial statement for which company. Then you look at the fair value of the given up asset by that particular company. I think that's how we should recognize the value of the asset in our books. Right? Then let's look at number 2. Number 2 says a machine of Bob Limited with a carrying amount of 90,000 was exchanged for a machine of YK Limited, which is carried in YK's records at 80,000. The fair value of neither machine could be readily determined. Which means we couldn't manage to determine the fair value here. So what are we going to record in the new asset that is acquired? Which value are we going to take here in the new asset that is acquired?
The carrying value of the asset that is being given up.
We use Bob's given up asset, which is going to be 90,000 here, ne?
Yes.
So every time when you are answering, when you are on this, when you are determining this, because what they do, they will give you a statement like this, then they want you to do a PPE for this particular asset. So the problem now, if you take the wrong figure, it means your PPE is going to be wrong. So which means in this case, always look at the given up asset. Who give up the asset? The ones you are doing their financial statement is the one who give up the asset. So which means we look at the given up asset by the company that you are doing the financial statement, right? There's a question that I want us to do together. Unless there's someone with a question, I want us to look at a bit long question so that we can test our understanding for the topic. Let's look at this question together. I think I sent it together with
Can I ask a question, please?
yes.
All right. Like you're in exam, right? How am I going to know that this question is based on the exchange of the PPE? Am I going to look for the keyword exchange, or are they going to state in the question paper that this is IAS 16.24 or what?
No, they will tell you that there was an exchange of assets. The
Okay.
question will be straightforward. They will tell you
Yeah.
that there was an exchange of assets. So
Mm. Okay.
what is important now for you is to be able to determine which figures to take based on that exchange. Remember, we have two criteria. One,
Yes.
the fair value can be readily determined, and two,
Mhm.
the fair value is not there. So which means
Yes.
that's the only what you are tested based on the standard. They want to test you if you know when the fair
Yes.
value is there, which figure are you
Yeah.
going to take? If the fair value is not there, which figure are you
Mhm.
going to take? But they will specifically tell you that the asset, there was an exchange of the asset.
Exchange. Perfect.
Yes.
I got it. Thanks.
Okay. Any other question before we look at this long question? Right, if there's no one with a question, I think you guys, you can see my question. You can see the question that I have here. Ne?
Yes.
Right, let's do it together. I think we have gone through the notes, everything together. So let's look at the question together and see if we can be able to, right, the question, when you are in the exam, remember the exam, there is no time. I always say this. So you should have a strategy to quickly answer the question. So like in this case, look at the question. What am I required to do? They want you to disclose the property, plant, and equipment not to the annual financial statements of Rost Limited for the year ended 31 December 2017. And we should comply with the standard, right? So if we are to disclose the property, plant, and equipment, what is needed there? So which means we need the carrying amounts of the assets. That's the only thing that you need when you are disclosing property, plant, and equipment. You need the carrying amount of the asset. So you can now come here and look at the assets. There is no need for you to read all these assets. You know you want to disclose. So which means you can read one asset, then you calculate the carrying amount of that particular asset. Like here we can read the stand 2976. Then when we are done calculating the carrying amount of the stand, then we go and do the machine. We calculate the carrying amount. PPE is all about carrying amount of the asset, the cost of the asset, the carrying amount of the asset, which means the carrying amount is going to be our cost less accumulated depreciation if you are using the cost model, or cost add revaluation surplus if we are using the revaluation model. But in some of the questions, you might find that we are going to use these two models together in other assets and in the other asset. And once the company decide to use the cost model in a particular asset, they should continue using the cost model. If they decide to use the revaluation module, then they should continue using, because there's no way you can say this year you use the revaluation module, then next year you use the cost module on a particular asset. Right. So let's look at what is happening on this question. The most important thing is the financial year. When I'm doing questions for FAC, I always look where is the financial year, because this is the only way you can be able to calculate your depreciation. The financial year is 31 December. Then what happens to here? They own a property which was purchased, and always on the date of purchase of the asset, and the date when it was available for use, and the useful life of the asset, and the residual value of the asset. If you have these, it means you can be able to calculate the carrying amount of that particular asset. Then they say the land was revalued for the first time on 31 December 2017. And on this date, the fair value of the land was determined to be 2,100,000. You can see from here that the land was, there's a revaluation surplus on the land, which means we need to increase the land to 2,100,000. Then they say on 31 December 2017, the residual value of the property remained unchanged, but the remaining useful life of the property was estimated to be 25 years. This one is a change in estimate. I think we still haven't done this topic for change in estimate. International Accounting Standard 8. So this one is a change in estimate. So we need to take account of the change in estimate. That is AIS 8. Right, so let's look at where do we start. Who can determine where do we start? We need to do, the question requires us to disclose the property, plant and equipment note. Where should we start when we are answering this kind of a question in the exam? We want to disclose the property, plant and equipment note to the annual financial statement. Anyone with an idea, where should we start?
I think we should
Yes.
start by laying out our format for PPE.
Yes.
Yes, that's exactly the first thing. All your calculation should go below your format. So which means the first thing that you need to do is to lay out your format. So we are dealing with Roast Limited. Then you need to do the notes for the annual. For the year ended is 31 December. (2017). So your first, we want to do the PPE, the property, plant and equipment. So the first thing is to look at the assets that we have. Let's look at the assets that we have from the question. We have land here. We have building and the machinery. I think those are the assets that we have. So which means we're going to have land. Before you even calculate the carrying amounts, you should have this first. Then building. I will not put the total column, but if the question requires you to do the total column, you can always put the total column there. So which means we need the carrying amount, at the beginning of the year. Then you will need what? The cost. Then you need accumulated depreciation. Then you will need, what else can we need? Like in our question, there is a revaluation surplus. We need to take into account the revaluation surplus. What else? There is depreciation. Here, let me say addition or derecognition. Then what else? Carrying amount at end of year. Then you need the cost accumulated depreciation. I think that's what we need on our PPE. So once you have this, then you can now go and do your calculations below. All your calculations should be below your answer. So which means you should have the format for the answer first, then you go and do the calculations. So in our calculations, we can go to the question. What is going to be our first calculation? Let's start with the land. What are we going to do with the land? What are we going to do with the land? The land, there is the cost on 1 Feb 2016. Then there is a revaluation. So which means on the cost of the land, we are going to have we're going to, on the calculation for the land, it means we're going to have the cost of the land, which is 1,960,000. Revaluation surplus. Then we need the carrying amount. The carrying amount at 31 December 2017 is 2,100,000. So the difference between the carrying amount and the cost is going to give us the revaluation surplus, which is how much there? Minus 19. So which means our revaluation surplus is going to be 140. So that's on the land. Then after the land, we have which other asset do we have after the land? We have the building. What happened to the building? The building cost 2,840,000. The building was available for use as intended by management on acquisition date. The building is an estimated useful life of 30 years and a residual value of 950,000. So we need to determine the carrying amount of the building here. How are we going to, where do we start? We need the cost. So which means we need the cost. So our calculation 2 is going to be the building. we need the cost of the building. The cost of the building is 2,840,000. That's the cost of the building. Then we need accumulated depreciation. We need accumulated depreciation. So our accumulated depreciation, we need to look at when was the asset brought into use. The asset was brought into use on 1 February 2016, right? And we are doing the financial statements on 2017. So what you can do here, there is you can have the depreciation for 2016, then have the depreciation for 2017. So the depreciation for 2016 is 11 months, and the useful life of the asset is 30 years. I always prefer to do like we have the useful life 30 years and the residual value. So it's going to be, let me just remove this so that I have enough space there. So the cost of the building is 2,840,000. Then the depreciation, they have a residual value of 950. So remember, the depreciable amount is going to be 2,840,000 minus residual value 950,000. Then you divide by the building has got a useful life of 30 years. I always prefer to convert to months. 30 years into months is going to be 30 times 12, which is equal to 360. So you divide by 360 times from 1 February to 31 December, there is 11 months. So you multiply by 11. So that is the depreciation for 2016. How much are we going to have as the depreciation for 2016? Which means you first remove the residual value, then you divide by 360. 360 is the useful life of the building. Then for the current year, the building was used for only 11 months. So how much are we going to have as our depreciation for 2016?
I'm getting 56,528.
50 what?
56,528.
56,528. So that's the depreciation for, I think my space actually is going to be small. Let me just add another page. You say 56,528. Okay, let me add, I just want to do it on one page. So the cost, we have the cost of the building is 2,840,000. Accumulated depreciation, we say is 2,840,000 minus 950,000 divided by 360 times 11. We say it's how much?
57,750.
You change now. 57,750. So that is the depreciation. Then we need the carrying amount at 31 December 2016. So we subtract the two, we get the carrying amount. How much are we going to have? 2,782,250. Am I right? So that is the carrying amount at 31 December 2016. Then the current year's depreciation. Let's look at the question. There's something that I saw on the question. The question says on 31 December 2017, the residual value of the property remained unchanged, but the remaining useful life of the property was estimated to be 25 years. We have got an idea. What do we do there? There was a change in the useful life.
Yeah, I think we need to add 1 year on 25 years.
Becomes 26. Why do we have to add 1 year on 25 when we are calculating our depreciation? Anyone with an idea the reason why? Why should we now divide by 26?
I'm not sure, but I think we are also considering the current year.
Yes, we take note. Remember if a question says on 31 December, that's the end of the financial year. There was a change in estimate. So what it means is from 31 December onwards, the useful life of the asset is 25 years. But the current year is not there. So which means you should add the current year. If they tell you about the change in estimate at the beginning of the financial year, then you should not add that year. So you should always look on here. There was a change in estimate at the end of the financial year, which means we should include the current year's depreciation. But if the change in estimate is at the beginning of the year, then it means we don't add the one because it is included in the 25 years, right? Then another thing, so which means we're going to have 26. Then there is also the residual value is 950. Okay, let me just go here. Which figures are we going to use? There was a change in estimate here. Are we going to use here or what? So which means we are going to have 2,782,000. Whenever there is a change in estimate, you start from that change in estimate, which means the carrying amount minus the residual value divided by that's 26 years. That is going to be the depreciation for the current year. Do you see the difference when there is a change in estimate? We are no more using this figure. We use the figure from when the change in estimate started. That's where we start to use the 26 to depreciate the asset. So how much are we going to have as our depreciation there? But we are going to see it when we do International Accounting Standard 8. There's a full topic for change in estimate. We are going to look for it in detail there. And so how much are we going to have here? You guys, where are you?
70471.15.
71. We can leave it like this. No?
Oh, yeah, okay, that's fine. Yes.
Then we need the carrying amount at 31 December 2017. So which means we just subtract to get the carrying amount there. How much is the carrying amount? Subtract from, so it's going to be how much? 2,711,779. So that is going to be the, so this is what we take to our PPE. You see, once you are done with your calculation, you see, so which means here we take our PPE, this calculation, then on the building, we take this calculation, which means at the beginning of the year, we're going to have the carrying amount at the beginning of the year, depreciation during the year, all this. So that's basically how we do our calculation. So let's look at another calculation that we have so that we can, so we are done with the stand 2976. We go to the machine. They say Roast Limited owns a machine used for the roasting of a specific blend of coffee. Due to a significant increase in the maintenance cost of this machine, the directors of Roast Limited decided to replace the old machine with the new machine. Details of the old machine are as follows. Acquisition debt, available for use debt, so which means this is the available for use for the old machine, the cost price of the old machine, the useful life of the old machine, and there is no residual value. So we have our cost and our useful life and our available for use debt. Then they say on 1 September 2016, Roast Limited purchased a new machine, or this is the new machine now. Right, let's start with what should we do? I think there's something that we should look at. When was this new machine derecognized? I think we should have the date when so they say on 1 September 2016, Roast Limited purchased a new machine at a cost of 625,000. On 1 March 2017, this new machine was available for use as intended by management. The expected useful life of the new machine is determined to be 6 years, and the new machine has no residual value. I think let's quickly calculate the carrying amount of the new machine. So in the new machine, what you look at is it was brought into use on 1 March 2017. Don't mind about when they purchased it. They brought it into use on 1 March 2017. So which means it starts to depreciate here when it was available for use. Then you should also look at the expected useful life of the machine to calculate your depreciation. It has no residual value. So we need to calculate the carrying amount of the new machine. So let's do our calculation number 3. The new machine. So we need the cost. The cost of the new machine, they say it's 625,000. 625,000. Then depreciation. It has a useful life of 6 years. So which means you are going to say 625,000 divided by, you can convert to months. I always prefer to convert to months. But if you don't want to convert to months, then you can use the 6 years. So if you say 6 years times 12, it's going to be 72 months. So you divide by 72. Then you multiply by from 1 March to 31 December. It's how many months there? 10. So you multiply by 10. If you divide by 6 here, let's say you say 625,000 divided by 6, then here you no longer say times 10. You say times 10 over 12. You see, so if you decide to divide by 6 years, then here you are going to say times 10 over 12. But if you convert to months, then it's easy now, which means here in the first calculation, you are calculating the depreciation per month, the depreciation per month times the number of months. Right, so how much are we going to have as our depreciation there? Uh, 86. 80 what? 806. So
Yeah.
which means we need the carrying amount at 31 December 2017. We just subtract, because this one is for 1 year, we just subtract the 2. How much is going to be the carrying amount? It's
538,194.
538,194. So we now have our carrying amount of the new machine. So we go and do the calculation for the old machine. We can now do the calculation for the old machine. So our calculation number 4 is going to be the old machine. So you see, when you are doing your PPE, more work is on calculation. Once you are done your calculations, it's going to be easy. So the old machine, we need the cost. What was the cost of the old machine? It's 480,000, and the useful life is 5 years. When was it acquired? 1 April 2015. Okay. So when you have a situation where it was acquired like this, so it means your accumulated depreciation should be from 1 April 2015 to 31 December 2016. Yeah, it should be from your accumulated depreciation should be from 1 April 2015 to 31 December 2016. So what is important now is for you to calculate how many months are there from 1 April 2015 to 31 December 2016. So which means here it's going to be 12. Then here it's it's from April, January, February, March.
9.
So it's going to be
9
9.
months.
So which means we're going to have 21 months here. We're going to have 21 months accumulated depreciation for 21 months. Then the useful life is 5 years. So which means when you go to your calculation, you come and do it like this. So the cost is 480. Then accumulated depreciation is going to be, it doesn't have a residual value, ne?
No,
Yeah,
it doesn't.
have. So it's going to be 480,000. 5 years, you convert to months, it becomes 60 times 21. That's the depreciation from when the asset was acquired until the end of the previous financial year. So that is your depreciation. So how much are we going to have as our depreciation there?
168,000.
168,000. So it's our depreciation is going to be 16. The reason why I prefer to convert to months, you see here, it cut calculation. Because if you don't convert to months here, it means you need to do the depreciation for 2015, then you come up with the carrying amount for 2015, then you do the depreciation for 2016, then for 2017. So this one is a shortcut to put together the 2015 and the 2016. So that's the reason why it is easier to convert to months, right? So we need the carrying amount at 31 December 2016, which means we're just going to subtract these two. It's going to 312,000. Then depreciation for the year. Let's look at the depreciation for the year. How do we determine the depreciation for the year? Remember, we've done the depreciation for 2015 and 2016. We want to do the one for 2017. So on 28 February 2017, the old machine was sold for, do you see, this is when the machine was de-recognized. Remember, we say we can de-recognize them on disposal or when at the end of the useful life. So which means this is where the de-recognition took place. So we need to calculate the depreciation before the de-recognition. Remember also we say we only choose to depreciate an asset when it is de-recognized or when it is transferred to assets held for sale. So which means we are going to stop to calculate the depreciation from 1 March going forward. So let's calculate the depreciation for this machine for, it's only going to be for 2 months. Yeah, it's only going to be for 2 months. So which means we come and say depreciation for the year is going to be 480,000. There is no residual value, so we say divided by 60 times 2. How much are we going to have as our depreciation there?
16,000.
So it's going to be 16,000. Then we need the carrying amount at 31 December 2017. We just subtract the 2. It's going to be 296,000. Am I right? Then we are done with our calculations. Then when you are done with your calculations, you just go back to your PPE and fill in. So we need the length. You can start with the length. The length cost was 1,960,000. Yes, there's someone you can ask the question. Yes, you can ask.
Hi, how are you?
Yes, how are you?
How are you, sir? I'm good. I would like to know, you normally say we need to convert the estimate useful life into months. So I would like to know with the one for the 26 years, because that one we did not convert it into months. We just took straight the 26, we divided by the 26.
Okay, let me just go there and see. All right, let me just go to the question. Okay, she's asking, we did not convert the one for the change in estimate.
Correct, yes.
Okay, anyone who can assist there? Is there anyone with an idea why we didn't convert this to months.
I think this one, because we wanted to calculate for complete 12 months without less or extra than a year.
Yes, if you are calculating for an asset that was acquired at the beginning of the financial year, there is no need for you to convert. You can still use the years because there is no apportioning there. So you can still use the number of years to divide because you don't need to apportion. The reason why we want to convert to months is you will see like here, this asset was brought into use at the middle of the financial year. So which means if you divide by 25, you need to apportion. So that's the reason why we need now to convert to months so that we can just come straight to the accumulated depreciation for that particular asset. But if the asset is depreciated when it was brought into use at the beginning of the financial year, there is no need for you to apportion, because even if you apportion, but if there is no need for you to convert, even if you convert, still you are going to multiply by 12. Let's say in any case you convert to months, whatever you get, you are going to multiply it by 12. You still get the same answer. So that's basically, you can convert, but you still get the same answer as long as you multiply by 12. I don't know if you get the sense.
Thank you.
Right.
Thank you,
So
yes.
I was saying, let's finish off, and I think we're just copying and pasting now. The cost of the building is 1,960,000. There is no accumulated depreciation. What do we say is the revaluation surplus for the building? Let's check. We just go to our calculation. The revaluation surplus is 140,000. So we take the 140,000. There is no depreciation. There is no addition. So we need now the carrying amount. So it's going to be this plus this is going to give us the carrying amount, which is 2,100,000. The cost is 2,100,000. There is no depreciation for the land. Then we go and copy for the building. So after we are done with the calculation, it's copying and paste. So the building is going to be, the cost is 2,840,000. The depreciation is 57,750. Our carrying amount. So we just go and copy this. So it's going to be, the cost is 2 million. 2,840,000. Accumulated depreciation at the beginning of the year, we say it's 57,750. So which means our carrying amount, we say, is how much? 2,782,250. Let's just double check if the figures are correct. So it's going to be 2 million. Yes, it's this one. Then while we are under the building, there was no revaluation surplus for the building. Depreciation for the year is 70,471. So it's going to be 70,471. Then carrying amount, we say it's 2,711,779. So which means after we are done with the calculations, just copying and paste the calculation 779. Accumulated depreciation, we need the cost. The cost, there was no addition, so the cost is still the same, 2,840,000. Accumulated depreciation, you add this one plus this one, is going to give us the accumulated depreciation. 57,750 plus 70,471 is going to be 128,221. So that is going to be the accumulated depreciation. Then we are done with the building, we go to the machine. What was the cost of the machine? The machine, there is 480,000. 480,000 plus the one that was acquired, 625,000. So it means it's going to give us how much?
When was the machine acquired?
There's 480,000 plus 625,000. So it's going to be 1,105,000. So that is going to be the cost of the machine. We combine the two, the new machine and the old machine. So it's going to be, the cost is going to be 1,105,000. Then we need the accumulated depreciation. Let me just check something that I want to show you something here. Right, on the machine, what you look at is here. You will see that the new machine was it was only depreciated in 2017. So the depreciation for the new machine at the beginning of the year is not going to be part of the depreciation. So which means we only take into account the depreciation of the old machine at the beginning of the year, which is 168,000. We take this at the beginning of the year, 168,000. So that is going to be our depreciation. 168,000. Are we together? Are we together, you guys, on this? So we subtract what is going to be the carrying amount. Minus 168,000. 937,000 here. Yes, you can ask.
I would like to ask, when was this new machine purchased? Was it not purchased during the current year?
Let me just double check. When did we purchase the new machine? on 1 March 2017, this new machine was available for use as intended by management, but it was purchased on 1 September. You see here, we combine it because it was purchased on 1 September, but it started to depreciate during the current year. That's why we didn't include its depreciation at the beginning of the year, because it was used available for use on 1 March 2017. So which means at the beginning of the year, there is no depreciation, but it was already there. I don't know if you get the point there. I know that's what you wanted to ask.
Yeah, and I can see now.
Yeah, that's the point, right? So that's another. Those are some of the small things that in the exam we should be careful to lose small marks. Right. So there was here. So which means now, but how are we going to record if this new machine was purchased on 1 March? There is no which means here it was going to come under additions. Am I right?
Yeah.
If it was purchased during the year, it was not going to come under here, under carrying amount at the beginning of the year. It was going to come under additions here. If it was purchased during 2017, the reason why we include it here, it was purchased in 2016, but was available for use. Remember, we say we only start to depreciate an asset when it is available for use. But when the company purchases an asset, obviously they have to put it into their records. So that's why here we include it here. But it is only going to start to be depreciated when it is now used in the production. Right, so which means if there was during the year, we're going to take it under additions, right? So that's there. Then what else are we going to was there any addition or whatsoever? So we need the there's no revaluation, we need the depreciation for the year for the machine. So which means we just go here. We check the depreciation for the old machine, for the new machine, 86,808 plus 86 is 86,806 plus the depreciation for the year plus 16,000. So it's going to be 102,806. That's the depreciation for the year. $102,806. What else are we going to do? Remember the old machine was sold, né?
Yeah, derecognition.
Yeah, we derecognize the old machine. So you derecognize at carrying amount. So which means we just go to our carrying amount and derecognize 296. So which means we just come here and derecognize, this is depreciation. Then we derecognize 296,000. Then when you derecognize, it means the old machine is no more there. So for you not to crack your head on the cost, you just come to the cost of the new machine because the old machine is no more there. So the cost is now 625,000. Accumulated depreciation at the end of the year now is only for the new machine. So which means you are going to take this as the accumulated depreciation, 86,808. So you just come and say accumulated depreciation is going to be 86,808. My space is just let me just do it. So it's going to be 86,808. Let me just do it. We're almost done. Let me just do this. Right, so it's going to be 625, 86, 806. Then our carrying amount is going to be 5. Okay, so you will be done with your PPE. So which means the most important thing is for you to know how to calculate your depreciation. That's the most important thing. Right, unless if there is anyone with a question, then we can close the class. We need to we'll look at I want us to look at another long question for this topic before we close it. So we'll look at another long topic before we close it. Unless if there is anyone with a question.